Welcome to Maxim's Inside Track. I've just got back from Gulf Foods in Dubai. I did manage to tack on an extra week and visit my family in the UK. It was my mother's 80th, so it's great to get back there for the first time in 5 years. But it did make me quickly realise just how lucky I am to live in Australia and this gorgeous weather here. So today, what I thought we'd do is I'd give you a little bit of a global overview of the market, really breaking it down between supply and demand factors across the world. We've seen the prices at quite high levels over the last few months. So let's kind of dig into that and see if we can get a bit more an understanding of that. So let's first consider demand around the world. I think most markets have suffered from the increase in exchange rates and inflationary pressures and things like that. We've seen prices in the supermarkets increase over the last year, so demand remains muted. Wouldn't say it's completely dropped off. Obviously, it's a food item, it's an essential, but it's definitely not it's not that bullish. So demand probably is flat at best. There are certain markets where they continue, they're high value markets and they continue to support pricing. So Japan being an example of that. The Middle East and Southeast Asia, they are buying dairy products, but typically when prices get a little bit too high, then they'll start to pull back. And then there's the big question of the elephant in the room, that the Chinese market, very difficult market to understand, almost impossible. But what is becoming evident, we believe, is that the levels of full cream and powders that they used to buy, mainly from the New Zealand or Oceania market, are not going to reach those same levels again anytime soon. Anyway, the domestic production within China now supports a lot more of their domestic demand. They still need to import, no doubt, but it's not at those same levels. So we shouldn't expect anything to dramatically change there. And China is going through its own economic issues with its housing market crisis and general economic issues post COVID. So demand overall flat, and nothing really in the future to support anything, any big changes. So now onto supply, and this is probably definitely the area which is causing having the biggest impact on global pricing. So we start with the main markets. The US production has been slightly down, milk production slightly down, and over the last few months, and we've seen record really low prices in certain products such as cheese. We're starting to see that low production starting to filter through to the market. So that we're expecting the pricing from the US to start to increase even in those cheese commodities. If we look across at Europe, they've just started their season. They're moving into spring. Certain markets there, so let's say Ireland, have started slightly later than they would have done, several weeks later than they would have done probably historically. But we're expecting product to come online over the next couple of months. The milk price is starting to increase over there. We're expecting production to be okay. So we are expecting there to be more product available. But right this moment in time, there's not that much available from the European Union and the UK, and they don't have much stock to push or export around the world. So then what that's doing is it's having an impact on the Oceania milk production or milk exports. There's been much more pressure put on Oceania probably this year as opposed to the previous years. Not much has been able to come from these other US or the EU markets. If you add in the issues in the Suez Canal and the Red Sea, and the fact that Europe has to go all the way around Africa now to get to Asia, then it's exacerbated that issue. So right now we're seeing a short-term pinch in supply, a lot of pressure being put on the Oceania market, and that Oceania market now is in the shoulder of the season. So most of the production in New Zealand is in that period, September through December, and we're now starting to see that tail off. So as that tails off and the EU supply has not yet come through, we're really seeing a short-term pinch. So in summary, demand is is relatively flat around the world, and supply is in a short term. There's a short-term pinch in supply. Product is available. No one should be worried that we're in COVID times and product's not available. There is product available, but the lack of supply, the pressure on the Oceania market, the lack of the EU product coming through yet, and the low product in the US is all having a short-term impact on pricing. So our thinking at this stage as Maxim Foods would be go short, buy what you can at this moment in time for what you need for your business. We believe we should see in that period, May through August, there may be some relief in pricing. There will be certain deals there with certain commodities such as skim milk powder or even full cream milk powder, where there is less demand, that there should be some reasonable chances of a slightly more bearish market in those products. Other products such as butter, where there is always demand, we believe, even though they may come back from these high levels right now, they won't. There's no outlook in the next 6 months for them to come back significantly. Then we move into the new season from September onwards in New Zealand, and at that point, everything starts again. All the dynamics are up in the air. So, and it will depend on weather and all sorts of things. That's how we're seeing it right now. Of course, as we all know in dairy, things change on a dime, with weather conditions, political conditions, or any logistical issues. So please tune in again in 2 weeks' time to the next Inside Track, and we'll see where we are in the dairy market at that point. Thank you for listening. Really appreciate it, and I will see you soon.